Hey everybody, this is Kurt Davis, and I thought I'd do another video today. Today's video is going to be a little bit different. I know we've been doing a lot of videos lately about buying property with little or no money down. This one's actually going to be, I've kind of called it basics of getting started in real estate investing, with primarily from a buy and hold standpoint. I'll probably do some videos soon on how you can get started, wholesaling, fix and flips, that kind of stuff. But this is primarily from a standpoint where somebody is new to real estate investing and they're looking to buy property for themselves to keep. So a few things to kind of know when you get started. What are the reasons? Why are you wanting to buy property? What has made it so that you are considering real estate investing? A few things that you might want to consider, and I'm sure you have considered if you are thinking about it, is I see a lot of people are looking for cash flow. Cash flow is kind of the main focus of why people want to buy property. Cash flow, return on investment. A lot of people can put their money into property and get a higher rate of return than, say, letting your money sit in a savings account, a CD account with your bank. People are also looking for long-term wealth building. That's one of the reasons why I'm buying property. And people don't trust the stock market. If you have your money tied up in the stock market and the market crashes, you've actually lost either all or a majority of your money, kind of like what happened a little over 10 years ago. So people are also looking for this because these are things that they can pass down to their kids at some point. I own 30 single family homes right now. I'm actually purchasing property number 31 coming up soon, but I'll eventually pass these down to my children at some point in time. It'll be their properties, or at least that's the plan. Because for me, real estate is my retirement plan. I don't have stocks, 401ks, things like that. For me, it is investment property as my retirement vehicle. Also, I would suggest get plugged in to your local real estate investment club. Wherever you're at in the country, I'd say there's a high probability that there is some form of investment club, like a RIA or some sort like that in your area, or maybe within a few hours. Also, BiggerPockets. You've heard me talk about this before. BiggerPockets.com is probably one of the best places to network and learn from other people in real estate all over the country. It's probably the best social media type platform website for real estate investors out there. I use it very heavily. I've made a lot of great relationships, networked with a lot of people, learned a lot actually too. So BiggerPockets.com is a place where you want to get to if you're not there already, because this is your education process. Networking locally as well as with using BiggerPockets, it's huge. Another thing to consider is, how do you plan on purchasing property now? Most people are doing conventional financing, 20-25% down with banks. A percentage of investors do use all cash. Some investors have some financing they can do with, say, their 401k, IRAs type scenarios. That's a whole other topic. But cash or conventional financing are really the two main ways I see people purchasing. So if you're doing financing now, you primarily have to purchase a home that is in move-in condition, because the bank's going to appraise it. If you're doing cash, you have the ability to buy a house that does need some level of repairs. A lot of times people will buy cash because they might get a better deal purchasing a home in as-is condition and making renovations. But then there's a lot of other things that come in play. You have to have contractors, and if you're new to real estate investing, I don't know what your risk tolerance is, but for some people they would not consider that. Also, you have to look at, when it comes time to look at property, are you using a realtor to find property? I would suggest, wherever you're located, try and do this first in your own market. See if you can purchase a property that works based on your criteria in your local market. If you cannot find what you're looking for in your local market, then, like a lot of investors, you'll look outside, you'll look long distance. Then, I see a lot of investors who look at turnkey companies especially long distance. It's kind of makes the process easier for investors. It's supposed to make it easier anyway, because essentially a turnkey provider is going to have everything in place for you, from purchasing, renovating, property management, fixing the homes up, things like that. It's all going to be done for you. If you're purchasing long distance and you want to use a realtor in a separate market, you can do that. There still is a little bit of risk involved. If you're long distance and you're purchasing cash to fix a home up, there's a lot more risk that goes into that and a lot more trust. So just a lot of things really to think about. And then, to kind of finish this up, once you do find a property, whether it be local where you're at or whether it's long distance, you need to be ready to act. I've seen a lot of investors who, what's the term, analysis paralysis, where they get so caught up in details and statistics and not sure whether they should do this or not. And honestly, buying property really is a big deal for investors. You're putting a lot of money down on an investment, and you want things to go like it should. Right. So all I would say is be prepared to act when a good deal that meets your criteria comes about. So,
and everyone looks for like the perfect deal, the perfect criteria to make, oh, I can get it for $40,000, put $25,000 into it and sell it for whatever, and make a $30,000-$40,000 spread every time. It just doesn't happen every time. You just have to guess it.
It's a lot more difficult. And there's still plenty of good deals out there.
Right.
There's good deals all over the place. It just,
sometimes you have the deal that's like perfect to your criteria, and sometimes it's not at where you want it to be, but you still made profit, and sometimes you made way more than you expected. It's just,
sure.
kind of
like I said, my criteria for what I'm looking for in properties is it would be traditionally different than what the average investor who's primarily looking for cash flow. So everybody's got their own reason for what they're looking for, and but primarily for new investors, you're looking for cash flow. So I hope that this video will be semi-beneficial to somebody who's new, getting started, looking for buy and hold.
So with rentals, one question I did want to ask you.
Yeah.
When you buy your rentals, do you assess the area and kind of project where you think the area will be in the next 10, 15 years?
That's a really good question. I would say the properties that I'm at least buying where I'm at, the areas are not necessarily improving greatly, or they're not going down either. They're solid areas. A lot of the property that I'm buying personally, I would contemplate and say that those are B class type areas. They're stable markets, and because of my unique way of purchasing, I do focus on a little to no money down strategy. So mine's different. I'm looking more for, I need to have high equity in these deals so that I can do my creative financing properly. But area is a big important factor, and that's why I always tell investors, if you can do what you're doing locally in your own market that you are familiar with, that's the first place you want to start. When you start looking long distance and you're not familiar with a market, sure, you can talk to the realtors and other people who are in that market. That's why you get on sites like BiggerPockets to network, because I'm sure if you are going to consider a market or another company, you can do your due diligence on, say, for example, turnkey providers if you're going to go that route. Get with a local realtor and get their opinion on the market and find out where they think you should buy. Make sure you're dealing with a realtor who is knowledgeable in the real estate investing world, because otherwise you're just dealing with your average realtor that, I don't want to say doesn't know much, but they're not experts in real estate investing. So, area and things like that are very important in general, but when you look outside your own market, it becomes very critical. So, but that's what I got.
So, another question I guess I might have, is there a way that you, I'd say, look at rents and see if they're going up, when you own these rentals, or when you get ready to purchase one? Is there a way you can look at rents and see if they're going up, in the past year or in the past couple months? Or?
We always refer to a website called Rentometer, and it's a free source, and you can go on there and you can see what rent statistics are based on a particular property address. It'll show you what the surrounding area is. I haven't used it enough to go back and see maybe what rents were 12, 24, 36 months ago were, but I mean, it's a great resource to at least see what's actually going on in that particular area. Now, it's not 100% accurate. You know, we have rented homes out for sometimes $100 to $125 higher than what the site will tell you that the average is, but it is a pretty good site and a resource considering it's free.
Right. Because, like, I mean, I know if you were getting your first rental property, you don't want to, let's say, invest in an area that's sort of like, you know, 38125. It's just very stagnant and it doesn't really have an upside. Well, maybe 38125 does, but certain areas of it doesn't really have an upside, and you don't want to, you know, come in and buy it at a high price, and now your mortgage is here and your rent only goes so high, so now your cash flow is just not going to go
You know,
up.
and it's interesting because you can look at all the rental data that you want, and I've seen houses that will rent right where they're supposed to. That's typically what happens, maybe $25 give or take here and there. Occasionally we'll have houses that'll rent out for $50, $75 higher. And the reality is that houses can rent lower than what's projected. Now, that doesn't mean that if it does rent lower, for example, that does not mean that this house is always going to rent out lower, especially if there's data that proves that otherwise, that it's higher. It just means that at that particular time, that's what it rented out for. I mean, I've had the scenario happen to me as well.
So, I mean, I guess the property manager could, you know, help out with a lot of that.
Sure can.
Tenant screening, and, you know, especially when you're on your first one. So I guess finding a property management company would be good too, right?
Yeah. I mean, property management is very critical, and I mean, that's another thing you want to look into. Now, obviously, if you're looking at a turnkey provider, a lot of turnkey companies will have in-house management, or they'll have a relationship with a management company if they don't own management. But you know, if you're doing this on your own and you're looking either local or long distance, you know, I suggest everybody to use a management company, even if it's your first property. I think managing properties, in my personal opinion, is miserable. I don't wish it upon anybody. That's why we have management companies. Management is key, though, because they're the ones who are going to handle your property after either you have fixed it up, or after someone else, the contractors, fix it up, or even if you bought a property that's ready to go off the MLS, once you turn it over to the management company, you're putting a lot of faith in them to get it rented out where it needs to be and manage that property accordingly. So property management it's not a perfect business, but you know, we try to find a company that you feel comfortable with.
That's pretty much everything I have for you.
Well, like I said, that's going to wrap this video up. I probably should have done a better job of formatting it, because we almost did not talk about property management. But if you did like this video, please click the like button, subscribe to our channel, let us know what you thought, and we will certainly be putting out more video. So until next time, thanks for watching. Like, subscribe. See you next time.